Hey, Rebel Bankers, this is your host, Chris Noggle, and welcome back to the show. I am here with someone that I can't wait for you to hear this story and all the things he's accomplished. He's just such a wealth of knowledge, and honestly, I'm intrigued, and I can't wait to get into this just to hear his story, hear what he's done and how he's done it. But I'm here with Jeremy Roll. We're going to get into Jeremy and his story in just a moment. Before I get started, I always like to talk about you, your journey to becoming a Rebel Banker. So we talk about this a lot. We talk about the fact that it's not about your actual resources. It's about how resourceful you can be. That's what's going to determine your success or your failure and your willingness to just go out there, do what it takes, and never quit. And that leads me to what I always say. What are you doing right now to get started? Are you sitting back collecting knowledge thinking you're going to take action when you have all the pieces of the puzzle together? Because that's not going to end well for you. You need to take action now, get started now. And hey, that can start as simple as grabbing a copy of my book, The Private Money Guide, so you can learn the solutions to where all the money is for your real estate deals and how not to ask for that money when you need it. But just get started, take action, and let's make you a Rebel Banker. Let's just jump right into this. So welcome to the show, Jeremy. I'm happy to have you on.
Thanks so much for having me. I really appreciate it.
Oh, I'm honored. So Jeremy is the owner of Roll Investment Group. He also has a nonprofit, which is the largest real estate meeting in California, I believe. I love the name. It's called For Investors by Investors, FIBI. So that is just such a perfect name for a meetup. And then he's also a cash flow investor, a passive cash flow investor. And he's been doing this since 2002 when he left the good old fashioned corporate world of clocking, in your hours, trading hours for dollars. And he finally broke free from that. But we got talking early on about a lot of things money related, and that's what we're going to do. Jeremy, just if you could tell my audience just a little bit about yourself and where you're at today with your business.
Sure. Yeah. And thanks again for having me. I really appreciate it. So, on the investing side, essentially, I started to invest in passive cash flow opportunities back in 2002. And that was a result of actually the dot-com crash. And there were two things that really bothered me about being in the stock market at the time, which was I was working at Disney headquarters, was my primary, way of investing like everybody else that I knew. And one was the volatility. So watching the stock market go up and down 30% in a year, just not for me. I'm a really low risk, slow and steady guy. The other, which is probably even more important though, was the lack of predictability. So not knowing where my retirement account would be in 10, 20, 30 years really bothered me as a strategy. And that's what got me looking into other ways to invest. And that's what actually got my focus into what I call kind of low risk passive cash flow, where I kind of invest for more predictability and stabilized assets. And I guess the best way to describe it, I invest in stuff where I go to sleep tonight, wake up tomorrow, and not much has changed. And that's, from both a profile perspective, but also I like to be in stuff that's really diversified across tenants or whatnot. And so I rotated my money from stocks and bonds into cash flow starting in 2002. And then by 2007, it was not even my intention to get out of the corporate world. I actually wanted the paycheck, the W-2, and just more predictability on the retirement account side. But at a last straw moment in the corporate world, my manager actually was working at Toyota headquarters at the time here in Los Angeles. And I decided to take a risk, leave the corporate world in mid-2007 off the cash flow. And that has been continuing on since, and hopefully just keep the cash flow snowball going and increasing. So I've been a passive cash flow investor since 2002 and full-time since mid-2007. And I spent, as you mentioned, I kind of had traditional corporate world background. I have a Wharton MBA, and I was over 10 years in the corporate world, kind of middle-level management in some great companies. I worked for Disney headquarters, Toyota headquarters, GM headquarters, and the jobs were great, but the cash flow really, without sounding like a infomercial, has completely changed my life in so many ways. In fact, before we started this podcast, my son had an early release from school, and so I got to see him just before we came onto this. And especially in LA with all the travel, everything has just completely changed in very many positive ways for me.
Wow, that's incredible. And, one of the things I really want to spend some time talking about, because we got into this a little early on, is I want to talk about the markets. What you think is coming, what I think is coming, and how to best prepare for that. Because I just feel like there's so many people out there just being led almost to, I don't want to call it their fate, but they're just following the herd and it's going the wrong direction. It's the age old, if you follow the herd, eventually the herd takes you off a cliff. You almost want to be steering away from that. And with what we're seeing in the stock markets, being my background, and that's a large part of what I used to do, I just don't like what I see. And that's also one of the main reasons why I've really pulled back on a lot of our real estate. A lot of the flips that we used to do, we're doing, a third of what we used to do, just because I'm trying to really stay safe. And I loved what you said about wealth and building wealth slow and steady. We're going to get along really well. And, when I tell you a little bit more about what I do, offline, you're definitely going to love the way that I view wealth, because it's exactly that. Low risk or no risk, control of your money, and the long game. It's always about the long game, but everybody just wants that quick dollar. It's just like we live in a society where we know the price of everything, but the value of nothing. And the problem with that comes down to everybody thinks there's an easy button. And the last time I checked, what is that? Staples that has the easy button. Maybe that works for your office supplies, but that doesn't work for building wealth. And if you think it does, you're going to be very surprised one day when you get a big slap in the face and you realize, wow, that strategy didn't work. So let's talk. So you went through the dot-com crash, and I was young. I had snowboard, skateboard shops back when that hit, but that hit was the first time I understood what a recession was, being an entrepreneur. And I remember I had my stores, I was highly leveraged. And at that point, when that hit, my business came way down and I had to get a job. Fortunately, or unfortunately, whichever way you want to do it, I landed on Wall Street. I landed as an advisor, and that's kind of where I carved my niche. But what do you think's going on right now? Like, what are your feelings?
Yeah, I would say that, you've touched on a lot of really good things that I fully agree with you on. One thing, I'm going to quote Warren Buffett, because the concept, and I was just talking to somebody about this yesterday, be fearful when others are greedy and be greedy when others are fearful. And so, another way you can put it, which what you just mentioned before, is stay away from what's hot. And that's exactly what I try to do. In fact, when I invest, because I invest passively, I can actually invest in anything I want technically that's managed by somebody else, right? It could be mobile home park, self-storage, apartments, could be all kinds of stuff. And I do all those. But what I do through the cycle is progress and watch things get more expensive and then kind of shift away from a specific asset class, but continue with the others. And so different asset classes will get more expensive at different points in the cycle, right? So back in 2009, right after we had all these foreclosures, apartments were in high demand, both from people who were getting foreclosed and had to live somewhere, but also investors knowing that. So apartments shot up between 2009 and 12, I would say. In 13, they really started to get pricey. But the point is that, it's one of the key things is to try to stay away from what's hot. Right now, if you look at a lot of metrics, whether it's actually the indices of like different commercial real estate asset classes, if you take a look at the stock market and various ways to look at it, we're extremely frothy. And that's pretty much what you're talking about right now. There's you could put up 30 charts right now for everybody who's listening and show what I'm talking about. And so that's really, you and I have the exact same concern right now. Yield curve inverted, right? And that is
game over.
100% predictor in the last 7 downturns, 100% accurate within a certain time frame. And so that actually tells us that theoretically, between now and at the latest, likely March of 2021, we're going to have a recession, and it's more likely to be sooner rather than later in general as we continue on. So there's a lot of indicators, and it's important if you're listening to this that you have a grasp. I do like 1 to 2 plus hours of reading a day of macroeconomic and all news, because you have to understand where we are to protect yourself, right? And this goes back to like a point you made as well before when we were talking offline about you got to get out of the weeds of the media and really understand what's going on and kind of synthesize everything for yourself and try to protect yourself. It's not necessarily going to be in perfect congruence to like what you're hearing on the media or on CNBC or the new stock market high, et cetera. You've got to really look at how cycles work and attune what you're doing to like actually going with the cycles. To your point, I've been on the sidelines since early 2017, trying to be really careful. I'm hyper diversified. I'm in over 70 LLCs right now. So I've been over 25 sales in the last 2.5 to 3 years. And I love the fact that we've been able to lock in these prices, and mostly sitting on the sidelines right now, waiting for an adjustment and to come back in at the right time. And actually, again, I'm going to quote Warren Buffett. Look at the amount of cash that Warren Buffett has sitting on the sidelines.
It's record highs.
And the funny thing is that you can read, if you go Google this right now, you'll see a ton of articles saying people can't figure out why he's sitting on the cash, right? But it's so obvious. He's sitting on the cash because of timing. He's sitting on the cash because his metrics show this is the wrong time to get into most things. That's the only reason why he's sitting on cash. He'd rather not be sitting on cash. He'd rather deploy it and actually make money off of it. So I couldn't agree with you more about the timing right now. I think it's a very dangerous time to invest, and I'm mostly sitting on the sidelines myself.
Well, I like that you said that, and you said it in a really simple way too. And I love Warren Buffett. Warren Buffett's been a huge part of my life and every decision I've made, all the way back to when I first became an advisor. And I've tried following everything. I didn't always understand he keeps things so simple. Like you said, be fearful when others are greedy, greedy when others are fearful. That's so simple. We all think we understand it, but do we act on it? And then his other thing he says, buy low, sell high, and don't lose money. So simple. To not lose money, just follow 1 and 2. It's not hard, but yet how many people are out of the market? I mean, I try to help as many people as I can understand, like, look, right now, the sideline's really good. Even though cash is not paying hardly anything, it's still better than the alternative. And you mentioning about Warren Buffett, how much cash he has. I mean, he is such a public figure. It's not hard for you to see this. Just go online. It's all over the news. But yet we're never seeking the proper knowledge because the proper knowledge isn't fed to us. They feed us what they want to so that they can then sell. And if everybody moves to the sidelines because of fear, well, that just does a whole hurting on Wall Street, and nobody's investing. And it takes 2 players, somebody buying and somebody selling, or somebody making and somebody losing is the way I like to say it. So you got to have a bunch of blind sheep running around in order for the big guys to be ready for the slaughter, and that's coming. And I hate to put it that way, but that's the world I came from. One person's unfortune is another person's fortune is, I guess, a great way to say it. But you said one thing that was key. You talked about the inverted yield curve and how it has never been wrong. 100% accurate for all those recessions you mentioned. I mean, I don't know what else people need to hear. I mean, what do we have to do? Put a gun to their head and say, just move to cash. No, don't take it out. Just move it to cash. Just, move it to cash. And that's it. And it's just such a thing I just can't understand, the psychology. Let me just give you one other thing. So I was talking to a potential client, and we're talking about her money in the market. And I said exactly that. I kind of recited everything you said. And I said, look, just move it to cash. And you know what she said to me? She said, yeah, I would do that, but I'm nervous because my advisor is going to be mad. And I looked at her and I said, whoa, hold on a second. Let me make sure I heard you correctly. Because you call your advisor and you ask your advisor to sell the positions and move it to cash so that you don't lose money when it goes down, he's going to be mad at you because he doesn't get fees on the cash account? What is wrong with that picture? And wow. I instantly said to her, I said, really, so you care more about your advisor paying for his BMW than you do about your own financial life? And I didn't know how to spin that. I really didn't, but it just made me really think about the psychology of how people look at money and how money really works. And the answers are so simple. Like you just move to cash. You literally have the world in your hand waiting, and all you need to do is sit there on your little tiki bar at the top of the mountain and wait for an opportunity to come up, and you're like, that one looks good, and you have the opportunity to do that. But not many other people follow that philosophy, and I just don't understand it, and I never will. And it's okay because I'm right where you're at. I'm on the sidelines. I really am. And I think that's just a lot to be said about everything you're doing with passive cash flow. And if you understand how to create passive cash flow, it's amazing. Let's take a couple minutes and just talk about like the passive cash flow. Like when you were in the corporate world, what was the one thing that really kind of got you to go left field, if you will? You were probably in a pretty good position working for some big companies, but you left. How, why, like what was that thing that made you take that leap of faith?
Yeah, well, I would say that, in all honesty, I spent a lot of years in really good positions that a lot of people would love to have. But there was something in my gut that was telling me that it wasn't the right fit for me. And I think what really I came down to as a conclusion was that I'm one of 10,000 people working at this headquarters, right? And I'm only contributing this much, but I feel like I had a lot more potential. And unlocking that potential was really what was bothering me the most. And that was eating away at me for years, but I never knew what to do. And being really conservative, I wasn't going to take too much risk to actually like make a switch. And then, the funniest thing is sometimes in life, very challenging events can be some of the best things that happen to you. And I still say to today that the kind of last straw moment I had with my manager in the corporate world when I'd switched positions at Toyota and I'd gone to a new division led me to want to try to leave. And now in retrospect, that's the best thing that happened to me. At the time, it was like the worst thing that was happening to me.
Right.
And so that to me was like kind of the straw that broke the camel's back that gave me the courage basically to give it a shot. I wouldn't have done it without the cash flow already set up. I didn't set up the cash flow for that purpose, but I would have not taken that risk had I not had the cash flow set up. So I was lucky in that, literally lucky in that I'd already had it set up because it wasn't planned for that purpose. But that was the last straw for me. But knowing that there was something in all these years, knowing it wasn't the right fit. And now I happen to be focused on passive cash flow investing. I love what I'm doing. And that makes a huge difference. I feel, if you look at the statistics, I think like 90% of people in jobs don't love their jobs. And I can relate to it, and I feel horrible for them. And, the best thing I could say is if you can find a passion and pursue it, and I know it sounds like textbook, it makes all the difference in the world. And I got lucky because I've always been into investing. I always used to, even when I was working, I would watch CNBC and everything else and just what was going on. And it was that final catalyst that got me out. And now I can focus on investing full time, and I happen to love it. So for me, I'm very lucky because I love it and I'm maximizing my long-term wealth. And I wanted to touch upon something you said that was very important. And I think actually can help people. I think the longer-term mindset can help people to have patience to sit on the sidelines. And to your point, with most people not having the long-term mindset, it's probably very hard to sit on the sidelines if you don't have a long-term mindset. But if you're thinking 30 years out and you're thinking, okay, I got to sit on the sidelines for a year or two or three right now, in the grand scheme of things, that's actually not a big sacrifice.
No.
If you're trying to just become rich very quickly, waiting 2 or 3 years is a huge sacrifice, right? That makes no sense. So the long-term mentality is huge. And, you can look at it this way. If you look at famous actors or actresses, they probably waited tables for 5, 10, 15, 20 years in many cases before they became famous. That's just the way life works. It's not what you see on Instagram, but it's actually the way life really works. And it's no different with investing. And even the compounding effect, which you're very familiar with, I'm sure, that takes 10, 20, 30 years. But if you put it on a spreadsheet, it's amazing if you have the patience, what happens there. So if you can think long-term and get the patience associated with that, it will change a lot for you. I really agree with you on that.
No, and that's some golden nuggets right there. I mean, so many people are playing the short game and they're not playing the long game. The long game will always beat out the short game. And you can play the short game and the long game at the same time with very little risk. You just need to understand where to put your money first, because you can put your money in vehicles that not many people know about, but you can put your money there and still have full liquidity of that money, have that money continue to earn compound interest, uninterrupted compound interest, which Einstein deemed the eighth wonder of the world. And you were just talking about compounding. It is single-handedly one of the most powerful things in the financial world, but it's also one of the things that so few people understand. People understand simple interest. I got 100 grand and it makes 6%. That's this much money. But what they don't understand is the effects of adding uninterrupted compound interest to that and how much of a difference that makes in that number. And, there's that one saying where if I were to offer you $1 million today, or 1 penny doubled for the next 30 days. That's an old one. Most people have heard that. But if somebody hadn't, the chances are they're going to say, oh, I'll take the $1 million today. But what they just did is they left $4.6 million on the table because they didn't understand compound interest. That's it. And that kind of is just where it comes down to the lack of financial knowledge. Now, you mentioned Wharton's MBA. Now, that is like, whoa. Like Wharton MBA, like a degree from there. That's crazy. Did they teach you how to do all the things you're doing now?
No. And in all fairness, I focused, but here, in all fairness, a lot of people that I went to Wharton, my classmates focus on finance. They end up in Wall Street, et cetera. And those are the type of courses they took. I took more marketing, entrepreneur related courses, just being more into marketing and entrepreneurship myself. And so, in all fairness, I did take one real estate course there, but I can't tell you what taking a finance track would be like there. But the reality is that I don't believe that anyone was focused on this type of investing there. I mean, the reality is that they're grooming a lot of people to go to Wall Street. And this is not the way that Wall Street typically invests. Some of the higher net worth clients in Wall Street can invest like this, but it's still not exactly the same. Point being is that that's not the purpose of what they're trying to teach. So.
Right. And that's kind of what I was looking for is a lot of people, they'll think, a Harvard, a Wharton, especially for the business side and the finance side. I mean, you would think that they would teach all this stuff, but the fact of the matter is they really don't. They teach you how to be an employee. I mean, most schools, maybe not an entrepreneur school, but most schools are teaching you how to go work for an industry in a job. because that's just kind of that's what they do. And Wharton teaches people to go work on Wall Street or do whatever. And they just don't teach them the simple principles that we're talking about. And really building wealth is actually quite simple. It's actually too simple. And if you want to listen to one person, listen to Warren Buffett. Like all the things that you just mentioned about Warren Buffett. Imagine if everybody just really sat down, stopped with the chatter, put their phones down, and just listened to like a YouTube video of all Warren Buffett's quotes and his justification for what he says. He speaks not at a 5th grade level, he speaks at a 3rd grade level that everybody can understand. And if you just listen and follow and mimic what he did, like his one statement, he says, if poor people would just do what rich people do, they wouldn't be poor anymore. That is so true. Yet that is the hardest thing in the world to ever get traction on. And it just blows my mind. And in the passive income, the passive cash flow that you participate in, and I mean, that is something too. A lot of people think, oh, that's got too much risk. It doesn't. You just got to learn. You got to sit down and learn. And you said, how much do you read a day?
I read easily over 2 hours a day typically. And it's actually, that's my first priority is I immediately start off with at least an hour in the morning right away. Just to catch up on what's going on, read the actual data. The key though, again, like I mentioned before, is not to go onto the mainstream media. I read mainstream media, CNBC and those to get a finger on the pulse of consumer sentiment and market sentiment and what's going on from a mainstream perspective. But you've got to take a look at data, sift through it yourself, understand what's going on. Here's a great example. Okay, we're recording this, I think, in November. I don't know if you're familiar with this. The Atlanta Fed GDP now, it's called, is projecting 0.3% GDP growth in the 4th quarter, 0.3%. I'm guessing that you're not going to see much about that in the mainstream media. You're going to see them more being optimistic instead of pessimistic or just realistic, objective, right? So, you've got to be very careful, get out of the weeds of the media and try and just stick to the data and draw your own conclusions, taking everything in. That's what I try to do when I read. So
how did you, what made you read? And I've got a place that I'm going with this, but what made you want to read an hour and a half, 2 hours? And you might know who I'm talking about here that you're mimicking.
Well, I'll tell you, I actually don't know who you have in mind, but the reason why I read is because I tend to be a very thorough person. And what I get worried about, it's almost like taking care of stress and that I'm going to miss something or I'm not going to keep my finger on top of the pulse of the market and see what really is going on, because I don't want to get basically blinded by something that I wasn't paying attention to. So I put the pressure on myself to keep up with things, because in the end of the day, I'm making my investment decisions for myself. I don't have a financial advisor, right? These are decisions for myself. And that means I've got to formulate my own opinions, but my opinions have to be on the ball and current. And I also, when I invest, I tend to invest for a longer term, right? We talked about that. And so I've got to think 5, 10 plus years ahead in the way that I invest. And that means I've got to stay on top of the trends, formulate my own opinions about what's going on. Will self-driving cars have an impact on the demand for retail space in 5 or 10 years from now? I've got to think about that. I've got to make my investment decisions based on what that's going to look like then and the stuff that I'm investing in. I can go on about drones. I can go on about robots replacing jobs and how that's going to affect things. Self-driving cars could change commuting patterns.
There you go. The largest employer, Uber, what happens when Tesla creates self-driving Ubers and all the people that work for Uber or Lyft no longer are needed.
Right. And not only
what's the impact?
But what is that? What's the impact of all the retail strip centers that people aren't driving to anymore, right? And one of the best and most obvious examples is, the top 2 states for the next 10 years as far as population migration, positive population rate, are projected to be Texas and Florida because of retirees. So if you know that fact and you're paying attention to that fact and you're investing 5 or 10 years down the road, you can start to say, oh, well, there's going to be a lot of senior living demand in Texas and Florida, right? Let me start looking into that. I can be ahead of the curve. Right? And being ahead of the curve, or at least avoiding the landmines, what I call it, down the line, that's what I need to do for myself to protect myself. That's why I do a lot of reading. These are just some examples.
Well, another person that you'd mentioned a couple of times that reads an awful lot and talks a lot about reading is Warren Buffett. That's one of his number one priorities, and almost identical to what you said. He reads the data. That's all he cares about. Warren Buffett is not a sophisticated, crazy, technical investor. He's a fundamental investor, which means he just looks at data. He literally reads companies' financials and he finds inefficiencies in their systems. I mean, it's data, and real data, not not the media, but we most people don't even know how to do that. They've never been taught how to actually find the real truth, the real data. We use Google, but the only problem with Google nowadays is the first 2 pages are all paid ads of what they want you to see, not what you want to find. So you got to be able to go past page 1. And I can't remember, I saw something somewhere that talked about the statistic of how many people ever get past page 1 in a Google search. And I couldn't believe it. I mean, it was ridiculous. I can't remember what the number was, but like I'm always going past page 1 because I know that's all just paid ads. That's all just SEO. But yeah, I mean, you could go down so many different tracks on this stuff, but really comes down to the simple fundamentals is just pick a path, follow that, study the data, and make, and diversify yourself in whatever you're doing. And I don't know, I think I love what you said about running the opposite way of the herd. If the herd's going one way, go the opposite way. It's such an easy thing to do. And, before we kind of wrap, tell me a little bit. I mean, I am intrigued with FIBI. I've seen it, for investors, by investors. I've certainly seen it. I didn't even know that was you because I speak at tons of RIAs and meetings all over the place. And I keep hearing about this one because it's huge. How did you find that? How did you create that? What's the purpose of it? I know you had mentioned that, it's something that you do not for money. So tell the audience a little bit about that because that's intriguing.
Sure. Yeah. So it's a funny story, actually, how it started. So between 2002 and 2007, when I was passively investing and building up that portfolio, I would go to a lot of meetings in Los Angeles. And I'm very lucky because it's a big city. There's a lot of meetings I'd go to network, but I had to go to network to find opportunities, and the types of opportunities I invest in, a lot of them are not allowed to be publicly marketed. So the problem is that there's a lot of meetings that have kind of like our sales pitches, but they sell books, tapes, and seminars. And nothing wrong necessarily with that. But it wasn't my personal focus. I wanted to really network with people. And so I'd have to sit in that room for 2 hours through a sales pitch and then network with everybody at the end and the way they're structured. So what I would do is I would sit in the back row with work from work, and I'd actually do work that I'd bring with me and not pay much attention. And then I'd network with everybody in the end, which is my primary purpose of being there. So the first meeting I went to after I was no longer working, I literally sat down and said, oh my God, I actually have to pay attention to this for the next 2 hours because I've got no work to do. Well, why am I wasting my time here when I can create my own meetings where the core foundation is there's no sales pitch? So I co-founded that with one other person back in mid-2007, started at like a Starbucks, with 3 other people that showed up to the first meeting. And long story short is, now it's 2019. We have over 30,000, registered users. We're the largest series of public and institutional real estate meetings in California. We have, at the moment, I think 6 to 8 active chapters. I can't recall exactly. We've had upwards of 13. And our core foundation is that there's no sales pitch, and we're very careful with who we have on. Whoever's going to be a chapter leader is going to be someone we've known for years that have years of real estate experience, a true expert who will not pitch. And those people typically have large networks to invite the right panelists or speakers. And so we're just very careful with the brand. And we haven't expanded beyond California very much because we're not looking to just have random people leading our meetings, because we're trying to be very careful with the brand and have the right type of meeting, what person's expecting to see when they come. So that's how FIBI works. We're a nonprofit. We've actually lost money every single year, as you mentioned, but it's a great forum for networking. It's great that we're actually able to help a lot of people to learn. And the no sales pitch aspect is really the core foundation of why it started.
Yeah, and that's valuable because I have been to lots and lots of these meetups where it's literally just a terrible pitch. One of the reasons, like when I travel, I think probably I get invited to so many RIAs and meetups is because I don't sell from stage. I just provide value and I teach. And, but I've been to them, many of them, where it's like from start to end, it's a big sales pitch. And I feel like I have to go home and take a shower when I'm done. But I love the fact that, the stuff you're doing is all about the networking aspect, because really first and foremost, that's why people go to these events. They go to meet people. And we have one here, and kind of an interesting story. We just changed the entire format just because we've been doing it for 5 years and I was just getting bored. So people are so used to, they come in, they network for a while. We do a thing called prop swap, and then everybody sits. So I went up to the front and I said, why are you guys sitting? And they're kind of looking at each other. I said, everybody stand up. I said, you guys aren't done networking. Get your cards out, start talking. And while you guys are networking, I'm going to start talking and tell you guys that. And you guys can just talk at a lower level. And I did that. And it was just a totally different dynamic because that's what they're there for. They're just so used to being pre-programmed of we come in, we network as quick as we can, and we sit down, because that was always the format. Now it's just like, stand, network. And then we did a panel. It was a women's panel. So we had successful women entrepreneurs and business or in real estate investors, and it went great. But it was that same philosophy. It was just network, network, network.
Yeah, the networking, I mean, if I trace back everything I've invested in on the passive side, it's all comes down to networking. Mm-hmm. That's why I've really tried to build that network up. I'm actually very fortunate that network built up, and so it just supercharged my ability to find opportunities. I spent all my days, reading, trying to find opportunities, networking with other investors to discuss other opportunities. So that's really what I do all day long, and it's absolutely critical for what I do.
That's awesome. Well, you built quite the thing there. I mean, the simple fact that I'm on the East Coast up here in Buffalo, New York, and I knew exactly what that networking meeting was, not because I was seeking it out, because people talk about it. You guys don't probably even advertise. It's just word of mouth.
No, we actually we started on meetup.com, and we actually we can't afford that. We literally don't make any money off it. We lose money. So I think a couple of chapters have tested a little Facebook marketing a few years ago, but we don't do any marketing at all.
Yeah, that's awesome. Yeah. So in parting, in final words, like what would you say during your entire process of kind of building everything you've built, from the nonprofit to your group to all your passive income investments, what's been your biggest obstacle you've had to overcome?
I would say two things come to mind. One is in the way that I invest, because I'm passive, I have to make a bet on a person. Okay. And I actually tell people I consider the person more important than the property. That's the order that I go in. And so having to learn how to, analyze a person, read between the lines, figure out who am I making a bet on, gut check on who I'm making a bet on, all that stuff has been just really, always a learning and process, right? And it continues on. And that's probably one of the most challenging things I have to figure out, is who am I going to make a bet on, and are they going to manage something well, and is that the right person or not? Another thing I want to say is that, because I have such a long-term focus, it's, having that long-term understanding that it's going to take 10, 20, 30 years to get to where I want to get. I'm 18 years in now, and I tell you that I'm hoping, in 10 years, I look forward to being in a good place, right? I'm in a fine place right now, but that's the reality. And it takes that long. So having that patience is also, and I've been extremely frustrated for the past 2-3 years because I have less cash flow this year than I had last year, by definition, because a lot of stuff's selling off, but I can't deploy it as quickly. So that's also been challenging, is dealing with the cycles when it's really hardest. In 2005, 2008, I was younger, I wasn't married, and I was going to dinner parties, and I tell people there's going to be a horrible housing crash, and they thought I was nuts, right? And at the same time right now, I've been sitting on the sidelines, and it's an excruciating wait. It's just an excruciating period. So right now, the biggest challenge is the wait. That will pay off, and I know it'll pay off, but that is challenging too. But that goes back to what we talked about before. If you have the long-term focus, you can keep everything in perspective. It doesn't make it fun in the meantime, but you keep everything in perspective. So.
I think that's some great advice right there. I mean, that was kind of your struggle, but that's just massive advice, what you just said. Some people, what do they say about patience? Patience is a virtue, but that's kind of not the word I'm looking for. But, if you look at 2009, if we could all take a time machine back to 2008, 9, 10, knowing what we know now, having capital ready to deploy, we'd all be, I don't even know where we'd be, multimillionaires, billionaires. I mean, it wouldn't have been hard because you could just go back to that time when all that opportunity was there. Well, everybody thinks, oh boy, I wish I could have, I should have, I would have. Well, do it now. And all you got to do is be patient for a little bit, and then it will come right to you if you're just waiting for it. And that's what you're doing. It's what Warren Buffett's doing. It's what I'm doing. It's such a simple thing to do. Just wait.
Yeah, and I would add to that, the question I asked myself today is, I say to myself, from a cycle timing perspective, it's 2006 or 2007. Does this opportunity make sense right now? And when you frame it that way, it's really easy to pass on a lot of things. But I think a lot of people don't ask themselves that question and can get into the wrong thing at the wrong time because they're not making themselves understand where are we in the cycle. And that's based off all the reading I do, and that's my own opinion, and it's very subjective, and I could be wrong. But that's how I keep myself in check at the moment. I ask myself that exact question.
That's a good question to ask, and it's a simple one that everybody should stare in the mirror and ask themselves the same question. So, Jeremy, if anyone wanted to get a hold of you or learn more about you, how would they go about doing that?
Yeah, best way to reach me is through email, which is jroll@rollinvestments.com. So JROLL@rollinvestments.com. I don't have a website. I'm just kind of So people, probably best way is to contact me directly. I am happy to network with anybody, whether you have opportunities, whether it's investors who are new or experienced, to just exchange information. I'm happy to help newer investors. I'm on calls all the time with newer investors who are curious. So any way I can help, feel free to reach out to me.
That's great. So you guys heard it there. If you want to reach out to him, he's a wealth of knowledge. Just send him an email. And, I always say the most successful people are the most accessible. So if you want to, get his advice, you want to network with him, there you go. He just gave you his email. So take action. That's what we keep talking about. So there was some serious golden nuggets dropped today. And I thank all of you for joining us for this episode, because I think this is a really good one. It's very timely, I guess would be the word for it. If you take this knowledge and these golden nuggets and you apply them to your life, I'll tell you something, there's going to be a massive opportunity coming for you when the storm hits. So with that being said, folks, make sure you go out there, keep on the journey to becoming a rebel banker, take action, and do it right now, because now is the only time you have. Thank you, and we'll see you on the next episode.